congratulations on a good set of numbers.
Thank you.
Just looking at the numbers, your PBTs are above 30%, both for group and both for local. What is driving that growth?
So a few factors are driving our growth in PBT. One is our revenue line we had really strong growth in Kenya of 21% year over year, including our other Kenyan businesses of bank assurance and wealth management. Our revenue was actually up 22%. So very good growth in bank assurance, in wealth management, in our cards business. We're seeing very strong growth, and we had much better interest income on the lending side. So obviously there has been a drop in interest expense as rates have come down. Second, we had much better cost control this year. We had our costs have gone up 10% and revenues up 21%. So that's really feeding into pre-provision profit before tax, which is above 30%. And our provisioning level, as we've shown, has been well managed. And so they're the real drivers. We haven't had big increase in provisions, and that's why our profit before tax is over 30% year over year.
In terms of NPLs, I've seen the other banks struggling a bit with it, but you've made some pretty good progress. What are you doing right that others are not doing?
I think, I think we all have our issues. The banking sector in Kenya, gross NPLs are much higher than I&M Bank. I would just say that we have a very strong rigor and operating rhythm, looking at managing our loans which are looking to go bad and helping customers during that process. So I just think it's the rigor that we have. But also, obviously, NPLs are a reflection of the state of the economy as well. And what I'm pleased about is I'm seeing now signs that the economy, banks will be lending more now, especially to the private sector. So I'm actually optimistic now on lending increasing to the private sector.
The recent actions on interest rates, are they going to help to probably lend more to customers?
For sure, for sure. The cost of borrowing has come down in Kenya, and we're already seeing signs of that large corporates are now looking to invest more in CapEx. We're seeing manufacturers open more LCs for raw materials. Last year that really declined, so I think that's a good sign. And also we're seeing certain sectors like hospitality, tourism, they've actually been investing already, right? Tourism is actually doing very well in Kenya. So as cost of borrowing comes down, I'm sure we will see more of our customers coming to us to borrow again for CapEx. We're already seeing that with a very good pipeline for the second half of the year.
Which strategy for you going into the H2? Which strategies for you? Which industries are you looking at?
So I think key sectors where we're seeing significant growth opportunities, one is oil and gas, leasing. Like I said, a lot more of our corporate clients are looking, instead of buying assets, to lease. So we're ramping up our efforts there. And then we're seeing an agri business. We've really invested a lot in having a good proposition for agri. And then for small businesses, MSMEs, and for individuals, our digital short-term loans has done really well. So we continue to see strong growth in that entire retail lending space.
I've seen you've set a very ambitious target of 1 million customers by end of 2026. How are you going to realize this? What is the strategy?
I think if you look at our run rates, we'll get close to that. So if you look at our run rate this year compared to last year, and you extrapolate that for the next 18 months, I think we'll be close to there, or we will get there.
Are you seeing the regional subsidiaries contributing more to the overall PBTs?
Yeah, so our regional subsidiaries did brilliantly for first half results, and it's great to see their performance. Actually, they did much better than the results because there was an FX translation, So in local currencies, actually, their performance was even stronger. So we're really pleased with the subsidiaries, and we're looking to continue to invest in our regional business and also looking at other markets.
What percentage of your business is digital transactions? The more digital transactions, more transactions are moving to digital. How is that changing how your branches operate? How are you looking at the operation of the branches? So
clearly, obviously, branches there are if you take our recent numbers that we showed, about 70% of our customers actually are coming in directly through the app. They're onboarding themselves directly through our app, not any branch face-to-face. But the branches still are extremely important because for advice, customers want to, like I said, there's a specific insight we have. A Kenyan consumer, they'll transact digitally, but for them to save money with you, they need to know where they can get their money out.